The market drops and then pops as the bulls squeeze the bears. Is the move down over? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that the market could try to gap down under the 200-day moving average and then try to break the trend line, giving us a waterfall-type sell-off toward 3,800. They were able to get past the 200, but not the trend line, and the bulls squeezed them out of there, giving a rally into the end of the day. Now the question is, are the bears done? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the rally today, it does change a little bit of what we're looking at. So let's jump into the chart and take a look. Okay, guys, so here we are on the daily futures chart for the S&P 500, and I've zoomed out a little bit because I wanted to show you a little bit of why there's some complexity at the top of the market that I've been talking about for the last few days. So off of this low back in October, and we did a video on October 12th, right before this low, saying that once we hit our low right around 3450, which we bottomed at 3500, we should be looking for an ABC higher towards 4300. So we got our A and B, but C fell short, one, of 4300, but also of filling out the complete pattern. It's very incomplete to the upside because typically your C wave should be about the length of your A wave, usually A equals C, or in a truncated version or a smaller version, you can hit the 764, and we didn't even hit that on the move up. So it's very incomplete looking to the upside, like it needs another high to complete the structure. So our initial take was when we failed to hold support up here, we would be able to get a diagonal to get that final high to the upside towards 4,300. When that failed and support broke, then it got very complex because now the pattern to get higher is either a bigger ABC or we've already completed this pattern and it's just a broken kind of incomplete pattern, which is very rare in Elliott Wave. So when we're looking at this, that is why there's so much complexity in what we're looking at and why we still talk about the upside and needing one more high. Now today, or yesterday, I should say, the market tried to break this trend line. Okay, this is coming off the top, and it's all the peaks down from July or January of 2022, and this is the move off of the highs, and we broke through that trend line on this ABC up. They tested it here, came back down, and broke through it here with a sustained push. And then we came back and we're testing it. And I said if we broke this trend line, it would be very likely we just continued straight down towards this 3,800 support area in this bigger wave B. But the alternate path was that we have this A, B, C pattern down to 3,800 before seeing a C wave higher towards the 43 to 4,400 area after that. And that would be more complete of a pattern off of this low and also go up and hit the targets we were looking for. So that is why we're still looking higher and not looking for the big sell-off just yet. So there's a couple patterns we're tracking here, okay? And two of them are going to look very similar, and then we'll figure out where we're at once we kind of diverge off of those two paths. So the first one is that we have a 1, 2, 3 completing here. We're looking for a wave 4 bounce up towards 4060 to 4100, and then a wave 5 back down after that towards the 3850 to 3800 area. Now, this will look exactly like the ABC that you see on the chart as well, okay? And they're going to be the same wave types. So wave B and wave 4 are both 3 waves up, and then they would both move down here toward wave 5. Now, the difference will be if this is going to be a C wave down, it should be impulsive to the downside, and the red count should be a diagonal, which means it should be an ABC to the downside. So that's how we'll tell the difference in those two counts if we see them. The other count that we're still tracking, okay, is off the high, is that the A wave actually completed here, and you have a W, X, and you get Y down to 3,800. If they're able to reverse yesterday's green bar and start back down and break this trend line in a more direct manner, then we could still see that direct route towards 3,800 from there. But if they do push up over 4,000 again, it is much more likely that we're headed up towards this 4,100 area in either wave B or wave 4 before seeing the move down towards 3,800 after that. So those are the two paths that we're tracking, and that's a little bit of why the complexity in the market is what it is off of this high. You have a lot of overlap up here. It is clearly a corrective structure, and from there we have to discern which count we're in, whether it be a diagonal in the red count or the WXY type count where we get 3,800 and then get a bigger C wave higher. Over on the NASDAQ,